There's a number that Wall Street doesn't want you thinking about. $318 trillion. That's how much debt exists in the world right now. Not million, not billion, trillion, with a T. And I'm about to show you why that number is going to absolutely shatter the silver market, possibly in the next 12 months. I spent 3 weeks digging into this, and what I found legitimately shocked me. Silver's breaking record highs right now. The metal's been in a supply deficit for 5 straight years, and almost nobody's connecting it to the biggest economic crisis we're facing. You're about to see charts that'll make your jaw drop. You're going to hear numbers that sound made up. But I've got the receipts, every claim, every stat. And by the end of this video, you'll understand why some analysts think silver could hit $100 an ounce, or why the system might break before we even get there. Real quick, smash that subscribe button. If this stuff interests you at all, you need to be subscribed, because I'm tracking this story every single week. All right, let's get into it. $318 trillion in global debt. I need you to really think about that for a second. The entire world economy, every country, every business, every person, produces about $105 trillion worth of stuff each year. We owe 3 times more than we make. You know what that's like? Imagine making $50,000 a year but owing $150,000 on credit cards. Except you can never pay it off. You can only make minimum payments that keep going up. That's where we're at globally. The Institute of International Finance dropped their latest report in early 2025, and the data's wild. Global borrowing jumped $7 trillion in just 2024. The US, China, France, India, everybody's piling it on. But we need to zoom in on America, because that's where this really gets scary. America's national debt just crossed $38 trillion in late 2025. We added over $2 trillion in 1 year. But that's not even the scary part. The scary part? We're now spending $1 trillion a year just on interest. Not building roads, not funding schools, not defense spending, just interest payments. The cost of having debt. I couldn't wrap my head around this when I first saw it. We're paying more to service our debt than we spend on Medicare, more than we spend protecting the entire country. The Congressional Budget Office, these are the government's own accountants. They're projecting those payments hit $1. $8 trillion within a decade. Think about that trajectory. We're basically doubling our interest costs in 10 years. And it gets worse. About half of all U.S. debt matures by 2026, which means we gotta refinance trillions of dollars. If interest rates stay where they are, or God forbid go up, every single percentage point increase adds $70 billion per year in payments. This is what economists quietly call a debt spiral. You borrow money to pay interest on money you already borrowed. Eventually, you can't borrow anymore, and the whole thing collapses. Historically, and I mean going back thousands of years, when governments get stuck like this, they do one of 2 things. They default and everything crashes. Or they print money and cause inflation. Guess which one they always choose? They print. And when they print, people run to assets that can't be printed. Real stuff, hard assets, gold, real estate, commodities, and silver. That's the setup. Now, let me show you what's happening in the silver market that absolutely nobody's talking about. So here's what's going on with silver right now, and I promise you this is going to sound insane. The silver market has been in a supply deficit for 5 straight years. What's a supply deficit? Simple. More people want silver than exists. Demand exceeds supply for 5 years in a row. In 2024, the world wanted about 3 billion ounces of silver. Miners, recyclers, everybody who produces silver, they made about 1 billion ounces. That's a shortage of 282 million ounces. Just vanished into the economy. The Silver Institute puts out this big survey every year. It's basically the Bible for this stuff. And their numbers show the deficit for 2025 is another 149 million ounces. Over 4 years, 2021 to 2024, we burned through a combined 678 million ounces more than we produced. That's equal to 10 months of all the silver mining on Earth. Where's it all going? Industry is eating it alive. Industrial demand hit a record 5 million ounces in 2024. 4th record year in a row. And it's accelerating. Solar panels are the biggest culprit. Photovoltaic applications ate up 232 million ounces last year. That's 5 times more than 2015. You literally can't make solar panels without silver. It's the most conductive metal we have. Every single panel needs it for the electrical contacts. As the world goes green, silver demand explodes. Electric vehicles? They need 67 to 79% more silver than regular cars. It's in the wiring, the charging systems, all the electronics. As EV sales grow, so does silver demand. And here's one I didn't see coming. AI and data centers. As companies build massive server farms to handle AI processing, they need silver for high conductivity components. This demand's growing fast. Plus electronics, 5G networks, medical devices, silver's everywhere. And here's what's different about industrial demand versus investment demand. When investors buy silver, they can sell it back. It goes back into the market. When industry uses silver, it's gone, consumed. Most of it doesn't get recycled. That's a permanent drain. Now, what happens when you drain supply for 5 years straight? Inventories collapse. COMEX, that's where silver trades in New York, they had over 400 million ounces sitting in warehouses back in early 2021. By mid-2024, down to 291 million ounces. That's a 27% drop. London's even worse. The LBMA reported inventories fell to near all-time lows, 827 million ounces in December 2024. And apparently, 551 million ounces of that is already locked up in ETFs. That means the actual available float, silver that can move around, might only be 276 million ounces. And nobody really knows how much of that is actually for sale. COMEX breaks their inventory into 2 buckets, registered and eligible. Only registered is available for immediate delivery. Right now, that's just 73 million ounces, up from a terrifying low of 30 million ounces in summer 2023. Read that again. Annual deficits are running 150 to 280 million ounces. Deliverable inventory is 73 million ounces. You see the problem? And prices are going absolutely nuts. Silver hit $34 an ounce in March 2025, a 12-year high. Then it blew through $50 in October. Recent trading has pushed it even higher, with some days touching above $60. That's nearly double what it was trading at in early 2024. Bank of America raised their target to $65. BNP Paribas is throwing around $100 as a possibility by late 2026. When major banks start talking about silver doubling from here, something fundamental has changed. And nobody's putting it together with the debt crisis. Okay, so you're probably thinking, cool story about silver, but what does this have to do with $318 trillion in debt? Everything. Let me show you what's really happening. When people look at massive government debt, they start asking uncomfortable questions like, how are they going to pay this back? Or what happens when they can't? And the answer throughout all of human history has been the same. They don't pay it back. They inflate it away. Think about it from your perspective. You're watching the government spend $970 billion a year just on interest. That's 13% of the entire budget. You see that number projected to almost double in a decade. You understand there's no political will to cut spending or raise taxes enough to matter. What's the only way out? Print money, devalue the currency, make the debt worth less in real terms. And what do smart investors do when they realize that's coming? They buy stuff that can't be printed. Gold and silver. According to multiple financial analysts, the surge in precious metals over the last couple of years is directly tied to debt concerns. Gold's up over 50% since early 2024. Silver's doubled in some periods. Central banks get this. They're loading up on gold at record rates. India, Turkey, Poland, China, they're buying like crazy. It's their hedge against the dollar. And now silver's getting the same treatment, but with a twist. Silver's also industrial. So you've got safe haven demand and industrial demand hitting at the same time. There's this thing called the gold-silver ratio. Right now, it takes about 79 ounces of silver to buy 1 ounce of gold. The long-term average is around 69 to 1. But want to know something wild? The actual mining ratio, how much silver comes out of the ground versus gold, is about 7 to 1. Silver's mined at 7 times the rate of gold, but it trades at 79 times cheaper. That gap's starting to close as people realize silver's massively undervalued. Now here's where it gets technical and scary. Most people don't understand how the silver market actually works. It's a fractional reserve system. What's that mean? On COMEX and the London Exchange, less than 2% of futures contracts result in actual physical delivery. The other 98% are just cash settled or rolled over. The entire system runs on the assumption that only a tiny fraction of people will actually want their silver. It's like a bank. They don't keep everyone's money in the vault. They assume you're not all going to withdraw at once. But what if that assumption breaks? We're seeing warning signs everywhere. There's this condition called backwardation, fancy word for when the spot price is higher than the futures price. Normally futures should cost more because of storage and stuff. When it flips, it means people value physical metal now more than a promise to deliver later. Silver's been flipping into backwardation repeatedly in 2025. That's not normal. Physical premiums are spiking too. Usually you pay 2 to 5% over spot to buy actual coins or bars. During supply stress, that can hit 10, 15, even 20%. And there's rumors, I can't verify this completely, but multiple analysts have raised the question, about double counting in the system. Like, is the silver in certain ETFs also being counted as exchange inventory? If that's true, there's even less available silver than reported. Let me give you a real example from this year. Late 2024, early 2025, when Trump tariff fears were ramping up, something crazy happened. Silver futures in New York started trading at a premium of nearly $1 per ounce over London spot prices. Why? Traders were pulling silver into U.S. warehouses ahead of potential tariffs on Mexican and Canadian imports. Those countries supplied 25% and 10% of U.S. silver, respectively. COMEX registered inventory jumped from 30 million to over 73 million ounces during this period. That sounds like a lot, right? Except it barely made a dent in the overall deficit. And now that inventory is getting drained again, this system is vulnerable, really vulnerable. If even 5 to 10% of paper silver holders decide they want physical delivery at the same time, the system could break. There's simply not enough metal to back all the paper claims, and with debt concerns driving more people toward hard assets. You see where this is going. All right, real talk for a second. You might be thinking, I don't own silver, I don't invest in commodities, why does this matter to me? It matters because silver is not just money, it's infrastructure. Your phone's got silver in it. The car you're going to buy in 3 years, probably electric, definitely has silver in it. The solar panels your neighbor just installed, silver. The 5G tower giving you service right now, silver. The medical equipment in your hospital, silver. When silver prices spike and supply gets tight, manufacturers have two choices: pay more or find substitutes. Problem is, for most applications, there's no substitute. Silver is the most electrically conductive metal on Earth. You can try to use less, but you can't eliminate it. At $30 an ounce, solar companies started looking for ways to reduce silver content per panel. They've made progress. But overall demand keeps growing because the sheer number of installations outpaces the savings. So what happens when silver hits $60, $80, $100? Electric vehicles cost more to build. That slows the transition, but that's just the immediate stuff. Ray Dalio, one of the most successful investors alive, said the current precious metals rally reminds him of the early 1970s. That's when the US went off the gold standard and inflation exploded. Same pattern. Unsustainable debt. Government can't cut spending, can't raise taxes enough, so they print money. The Federal Reserve will eventually have to choose. Let the government default or print more dollars. They'll print. They always do. That's inflation. And inflation is like rocket fuel for precious metals. Now think globally for a second. Emerging markets owe $8.2 trillion that needs to be rolled over this year. Some of that's in dollars, which means if the dollar strengthens, those countries are screwed. If we see debt crises spread across multiple countries simultaneously, you get a flight to safety. Everyone runs to hard assets. The Institute of International Finance has warned about bond vigilantes, basically investors who start demanding way higher interest rates from sketchy borrowers. That could force governments into harsh spending cuts or defaults. Rising trade tensions and frozen U.S. foreign aid could trigger liquidity crises in countries that depend on that money. This isn't some future hypothetical. This is happening right now. And the silver market is showing serious stress. London lease rates hit above 30% points in late 2025. Normal lease rates are like 1% to 2%. When they hit 30%, there's a severe shortage of physical metal. This creates a feedback loop. Debt fears drive safe haven buying. Industrial demand keeps growing. Supply can't keep up. Inventories drain. Prices spike. More people want physical delivery. System stress increases. The loop continues. Here's my real concern. If the silver market actually breaks, like a real supply squeeze where people can't get deliveries, it disrupts critical industries. Solar panel makers can't get silver. Renewable energy transition slows down. EV manufacturers can't get enough. Production delays. Electronics companies, same problem. Medical device makers, shortages. The Silver Institute's projecting ongoing deficits through 2026, with this year's shortfall around 117 million ounces, one of the largest ever. We're not talking about abstract financial markets anymore. We're talking about potential disruptions to the physical economy. And let me paint you 3 pictures of how this could. This is the nightmare scenario. Something triggers a panic, maybe a major bank fails, maybe a government defaults, or maybe just too many people try to convert paper silver to physical at once. Physical premiums explode to 30, 40, 50% over spot. People holding ETFs and futures rush to get actual metal, but there's not enough to satisfy all the claims. Exchanges invoke force majeure. Lawyers speak for, sorry, we can't deliver, here's cash instead. Except nobody wants the cash. That's why they bought silver in the first place. Silver prices go completely vertical. We're talking $150, $200, maybe higher in a matter of weeks. Not because silver suddenly became more useful, but pure supply squeeze. Solar production stops, EV supply chains break, electronics shortages, medical device problems. Governments step in with export bans and price controls. Black markets develop. Is this likely? Probably not in full disaster mode, but pieces of it? We're already seeing some of this. Scenario 2, the slow grind higher. This is what I actually think happens. Silver steadily climbs to $75, $100 over the next 12, 24 months. Not a crash, a repricing. The deficit continues for another 2 to 3 years. During this time, new mines get built. Projects that weren't profitable at $25 silver make sense at $50 and up. But this takes time, like 7 to 10 years from discovery to production. Industrial users get creative. Solar companies reduce silver loading per panel even more. Electronics makers find marginal improvements. But there's limits before performance drops. Recycling increases. At higher prices, it becomes worth it to recover silver from old electronics and industrial waste. This helps, but doesn't solve the deficit. Investors pile in hard. ETFs see massive inflows. Some central banks even add silver to reserves. The gold-silver ratio compresses toward 50 to 1 or lower. Silver significantly outperforms gold. By 2027, 2028, the market finds a new equilibrium around $75, $90. The energy transition continues, just at higher cost. Manufacturing adapts. The debt problem? It gets worse, but governments manage it through financial repression, keeping interest rates below inflation, slowly inflating the debt away. This is bad for bonds and cash, good for hard assets. Scenario 3, the soft landing. This is the unlikely one. Governments actually get their finances in order. Real spending reforms, growth outpaces debt growth. Yeah, I'm skeptical too. Technology breakthroughs dramatically reduce silver needs. New solar panel designs that use half the silver. Batteries without silver components. Major new silver deposits get discovered and developed fast. Industrial demand growth slows as renewable build-out matures and EV adoption plateaus. In this case, silver peaks around $65, $70, then drifts back to $40, $45 as supply catches up. Honestly, I give this maybe a 10% chance. Too many things have to go right simultaneously. Here's my timeline. 2025, 2026. Continued deficits, rising prices, high volatility. Silver probably reaches $75 or $85 by end of 2026, with potential spikes to $100 on supply squeezes. 2027 and 2028, peak stress period. We'll see if the system can handle it or if something breaks. New supply starts arriving, but not fast enough. 2029, 2030. Either stabilizes at new higher prices, or we've had some kind of market reset. The big picture. This is all playing out against historic debt levels. The Congressional Budget Office projects U.S. debt hits 116% of GDP by 2034 under current policies. Eventually, something gives. And historically, that something is always the currency. If inflation's the path, and it always is, silver benefits enormously. Okay, let's bring this home. 4 things to remember. First, global debt's at $318 trillion and rising fast. The U.S. is paying over $1 trillion yearly just in interest. This isn't sustainable. The end game involves currency debasement one way or another. Second, silver's in serious trouble on the supply side. 5 years of deficits, inventories draining, industrial demand at records and still growing. This imbalance can't be fixed quickly. Third, these 2 trends are colliding. Debt concerns are pushing safe haven demand on top of already strong industrial demand. Silver's uniquely positioned as both a monetary asset and a critical industrial metal. Fourth, the market's showing real stress signals. Backwardation, extreme lease rates, declining inventories. This could get way worse before it improves. I'm not a financial advisor. Do your own research, make your own decisions. But if you ask me what I'm watching, comics, inventory levels, London lease rates, the gold-silver ratio, central bank buying patterns, Fed policy, and real rates. Look, I know we covered a ton of ground here, but understanding how global debt connects to commodity markets is critical right now. Smash that subscribe button if this was valuable. I'm tracking this silver situation weekly because I think it's one of the biggest financial stories developing right now. Drop a comment. Do you think silver hits $100? Are you stacking physical? What's your take on the debt spiral? Next video, I'm thinking either a deep dive on silver mining stocks positioned to benefit or breaking down the solar industry's silver problem. Vote in the comments. One last thing. When I started researching this, I thought it'd be straightforward supply and demand, but it's really a story about trust. Trust in currencies, trust in governments, trust in the financial system, silver, gold, and right now, there's a whole lot more debt than real stuff. Thanks for watching. See you in the next one.